How we doing, traders? Welcome to the SPACs attack, baby. Let's do it. Let's get started today. Really want to first apologize to all our loyal viewers for yesterday. Sometimes we're going to have some technical difficulties. If Comcast stock goes down, it might have been because Mitch lost internet. But we'll go ahead and we'll move forward here. Let's get into today's show. I got my man, the brains of the show, Chris Katje, with me. Say hello, Chris.
Hey, guys. Hey, Mitch.
All right, guys, we're doing great today. We have another exclusive interview. I definitely also want to let you guys know, if you didn't already check it out, definitely check out the interview that we put out yesterday. That was with James Latinsky, and that was the founder and CEO of a really cool deal. If you don't know about the rare earth minerals, you need to check it out. This is ticker FVAC that just changed over to the new ticker and the completed merger, which is ticker MP. And boy, is it having a day. Do you see this stock today, Chris?
Yeah, it's on a tear today. It looks like that attention yesterday paid off, that new move to the New York Stock Exchange. If you have not watched this interview yet, you're going to want to check it out. Latinsky talked to us about electric vehicles, wind energy, bipartisan support, a new Department of Defense deal, and down the road being able to sell directly to Tesla. So you do not want to miss that interview.
Yeah, without a doubt. I mean, if we come here and we take a look at this chart, we're seeing this push on up there to the 1680s at 940. Now we've gotten a kind of a support here built at 1570s. Let's see if this can really start holding on up there today. Definitely, you can tell some interest in this stock. And we brought you the interview yesterday, guys. So if you guys didn't check it out, definitely check it out after the show. Okay, so let's go ahead and let's get into some really great notable headlines. Chris always has the information. Let's go ahead and just to help out Tony Nugent here on Facebook watching. That was ticker MP materials. Then I'll put up the link for you guys while Chris goes ahead and talks about the notable headlines here. So let's get into some headlines.
All right, guys.
Take us in here.
All right. So we have Quell, symbol QELL. That was a SPAC IPO from a couple months ago. That is splitting today into common shares and warrants, giving more access to traders to be able to acquire shares in that. This is a SPAC led by Barry Engel, who was the president of General Motors North America. He also ran the Chevrolet brand before taking that role. Former Ford executive Kathleen Ligocki and private equity veteran Sam Gabbett are also attached to the SPAC. All three of them worked at Agility Fuel Solutions, a clean energy storage company. And Engel was the CEO of that company, and he also led Think EV. So obviously, we've talked about EV SPACs being hot. This one has people in the auto and the EV market attached to it. So I think they're going to be looking in that industry, and I think they're going to acquire, a great target. And with shares being available to everyone now, I think this is one that people should be watching. Yesterday, we saw Ride, Lordstown Motors, continue to trade higher. They really pushed towards that all-time high level of 31 that we saw when that deal was announced. CEO Steve Burns was on CNBC Tuesday night talking to Jim Cramer. It really got some play yesterday. Then on that, we told you Tuesday morning that he was going to be on Mad Money. So hopefully some of our viewers got into this name off of that news. But I really don't think this rally's finished yet. Pay attention to those levels. And I think this one will hit all-time highs again soon. CIIG merger acquisition announced their SPAC deal yesterday with Arrival, which we told you about here. This is an electric bus and electric van play. They have a deal with UPS for 10,000 vans, and UPS is also an investor in the company. Stock was up big yesterday, and it's running higher again today. I think people are starting to realize the impact of that large UPS deal and the attention that this company is getting. So, that's one that people should definitely be watching as well. And then we talked briefly NGA, Northern Genesis acquisition. It traded below $10 for much of October and November, starting to head higher. This one is rumored to be acquiring Lion Electric, which is a EV play that also has a deal from Amazon. I think it might be smart for people to get in here, as I believe this one will pop on that announcement if they do acquire Lion Electric. Again, as we saw CIIC pop yesterday, this could be the next one for traders to get into based off of rumors. And then Tattooed Chef, TTCF, we've talked a lot about on the show. Shares are down today. There was a new short report coming out from hedge fund Carisdale Capital. That report said that their revenue has risen rapidly, but retail sales have started to stall. The report says over 70% of branded sales come from Sam's Club, which shows concentration risk. The company trades at 13 times branded sales, which is higher than other plant-based companies. Said that the stock is worth half of its current value. Guys, if you were waiting for the right time to get into TTCF, I think now may be the time around that 15 and change level. Remember, we told you here they recently launched their e-commerce site and they're getting their products into Target. Those are two items that were not covered in the short report. I'm not worried about the concentrated risk with Sam's Club because, again, they're expanding. I think this was the perfect time for buyers to maybe get into this name there on this drop today. And then talking IPOs, we have three big IPOs happening today. We have YSG, which is Yatsen. This is one I think people should be watching. This is a Chinese beauty e-commerce company. So they raised $617 million. They priced at $10.50 for their ADS, which was at the high end of their range. They are the number one online color cosmetics brand in China with their Perfect Diary brand. They also have the number one eyeliner mascara brand on Tmall, which is operated by Alibaba. Perfect Diary was the only brand of color cosmetics to have 100 million RMB on Tmall for each month in 2019 and the first 9 months of 2020. They have a fan base of over 48 million people. China has the largest percentage of e-commerce penetration for the beauty market, 31.4% compared to the US, 21.9%. They obviously have a huge millennial and Gen Z population, which are pushing that online beauty sales market. Their year-over-year revenue was up 377% in 2019 to 446.4 million. And the first 9 months of 2020, they have already surpassed that with a total of 481.9 million. Our next IPO is Neo Games, NGMS. They are an iLottery company operating in Europe and several states in the US. They priced at $17, which was above their range of 14 to 16. They have deals with Virginia, New Hampshire, North Carolina, and Michigan. Michigan is actually the country's highest grossing iLottery market. Their revenue for the first 9 months of 2020 was up 46%. And they have seen growth from the online shift to iLottery products due to COVID-19. Their third quarter revenue grew by 130% in New Hampshire and Michigan. So this is one that people should be watching for that iLottery play in that industry. And then our last IPO today is Telos, TLS. They are a cybersecurity company. They priced at their mid-range $17. They count the Department of Defense, CIA, FBI, Amazon, and Salesforce all as customers, which is obviously some large names. Revenue was 159.2 million in 2019. They expect their revenue to accelerate in 2021 and 2022 due to several large contract wins. Their Ghost segment landed a deal with the TSA for pre-checks, and they secured a 10-year deal with the Center of Medicare and Medicaid for background checks in healthcare. Those new contracts, they think, could add $75 million in 2021 and $135 million in 2022. So again, the revenue growth wasn't huge in their IPO filing, but with that new deals coming into play, this is one that investors should get excited about to get in at these IPO levels. So that's it for headlines today.
Yeah, the reason why Chris is the man with the brain, guys, as you can see from all that information, definitely, if you need to go back and slow us down so you can get all that information, do whatever you need to do. We do this for you guys at the end of the day. That's why you guys get some information here on the SPACs, on the new IPOs, and it's definitely going to be interesting. I was looking at that one that you mentioned about the e-commerce and kind of the China play here, the Chinese beauty e-commerce play. I mean, at the end of the day, I think this is going to be an interesting one right out the gates. This one's going to IPO at 1050. I don't think it's gone live just yet, so it should be coming up in the next probably I think like an hour or two. So keep your eyes out for that one. If I notice it go live while the show going, I might just pull it up here, guys. All right, guys. So let's go ahead and let's get into something fun here. I know, like always, guys, if you guys are getting value, definitely smash the like below, hit the subscribe. We do this for you guys every single day. So let's go ahead and let's get into the watch list here, guys. Every time you got to enjoy it, right, guys? All right, guys, let's get into some of the watch lists here. I'm going to pull it up here as we're seeing, SBE. This is one we've been talking about, I think, since show one. This is one that's up there 9% on the day. We can take a look at the daily chart here. This is one that, we've been talking since like, I think day one of the show. And if you look back in about 1 week, we've been going on up. To me, this one seems like a little bit like a rocket. All right, guys, just having some fun today. Let's go ahead and let's get into another one. I know we covered MP, but man, it's definitely up there, 8% now. Great thing to know, especially what I like to do whenever I see a stock come out into a merger. I want to pay attention to the support levels. I want to know when we finally get that kind of that bottoming action where we get some good volume. I think today you're seeing that volume come in near that 16 price point. So I'm going to really pay attention to that $16 on MP here. Okay, let's go ahead. Let's get back to the watch list here. What else we got here? We got Ride up about almost 4% here. And I know we talked about that one. So let's go into another one that we talked about early in the week, VLDR. We talked about this one last week. And, it's really starting to catch a bid there near that 14. I think that's going to be very vital to it. If it can come back down towards the 15 and hold the 15, or get some potential catalyst to get it back up above these 18s. You are seeing some volume that kind of pushed it on up there towards the 16 level. So I definitely keep this one on watch. What else we got here that's moving for today? You got Helion moving. We got another one here that I like. I've been really trying to keep an eye on this one. I know IPOC is one that everyone's starting to see get underneath that $10 price point. So let me pull up this chart. This is a stock that went up there for a while. It was up there to $13. Now pulling back towards the $9.98 area. I think you need to wait to see if it can hold kind of the 980s. I know that that's a very important level to watch for on these SPACs. And then once it gets back above 10, that's when I try to watch it, guys. Like I always talk about my pattern. I'm looking for 2 days to hold above $10. Okay, guys, let's go ahead and take some look at the chat. I want to say hello to some of the loyals here. All right, guys, so I want to definitely say hello to Nell and NYC, Tom, how we doing, Jeff, Joel, Steven out there. Oh, we always got the sheriff. It looks like he wants to bring up here IPOB. Let's take a look. Let's take a quick look. I'm willing to take a look here. All right, let's pull up our Benzinga Pro here. IPOB. But you know what? I think we should add that one in our watch list. It's being mentioned by our chat. Let's add that one on our watch list here, guys. So IPOB. Oh, that chart looks beautiful to me here. Let's take a look here. So one of the things that I like to do, guys, is always look for that prior resistance to become support. And if we see here, guys, you can see this breakout here. This first one, this was when we got that candle, that big volume push. We want that to become kind of that support area. And if you see this 18, that's where it's kind of finding this support in this new area here, guys. And so one of the things that's going to be vital for this one is if it can get some volume. As you're seeing these volume bars down here, they're very small, right? So we want to see another spike of volume to show that confirmation that the bulls are ready to take control and move this thing back up there to that $27 level. So definitely want to give a shout out to also, we got in here another stock I'm noticing, got Helion being mentioned here by Nels NYC here. Let's go ahead and take a quick look at that one. All right, let's pull up that one. That's Helion right here. Let's get into a whole chart here. So one of the things with this stock is that this one rocketed out for a long time. It was pushing to new heights before it closed the merger. And I think what you got to start seeing is kind of a triple bottom or a double bottom in this stock. You are starting to see some volume pop, and that was right here. You saw that downtrending. All of a sudden, boop, you get that volume pop. Those are the things I look for as a trader, because at the end of the day, that shows that volume is starting to come back into stock and the momentum can come back in. So I'd be paying attention towards this $26 area and seeing if we can hold this 24 on some pullbacks, kind of like a little pop up above 26 when it pulls back towards the 24 and then makes its way up here towards that $30 area. That's kind of what I'll be looking for in this stock. Like always, guys, you got to know your levels. Levels are so vital to everything. And when you're trading technically, and also when you're trying to time these stocks, what I try to do is always find the stories, find when the catalyst can come. And that's really when you can go ahead and try to time a good support entry, and always risk management. Okay, let's go ahead and let's get into some more of our watch list here. I know we got some other stocks here that I like. This VG.
Mitch, I'm gonna jump in on highly on there while you're pulling up the next one. So
Go for it, man.
I see that one getting asked here in the chat. So Hyliion is one that I have owned for a long time. Again, as Mitch said, this one rocketed before that SPAC deal closed. It has traded down since then, but you are starting to see that movement up. So when they reported quarterly earnings, it sold off because there weren't really anything new announced, no new deals. But the CEO did say that they were in talks with several companies. They were seeing strong demand for their product. So you have the potential here to see deals announced anytime. And that is a major catalyst on this stock that has traded higher many, many times. So I think as soon as we start to see any sort of deal announcement from the company, this one will take off again. This is a play on net zero emissions. This is a potential Biden play. This is a play on certain states like California banning the sale of gas-powered and diesel vehicles by 2030. Zero emissions is going to be the thing going forward. And Hyliion is helping existing Class 8 semis retrofit their vehicles to meet those emission standards. And they're also working on a new Class 8 truck. So they have the play right now, and they also have the future play. This is one that people should definitely be watching. And again, if you want to get in, you may want to get in before those deals are announced, because it could rocket higher.
All right, guys, I have a question in the chat here. It's going to be an interesting one here, provided by Jay Rice. All right, so Jay Rice asking me, what are my thoughts if you caught a big move? Do you take some off the table and maybe buy some of the warrants? So this is a very interesting question here. Reason why it's interesting is at the end of the day, we had someone that came on ETF, and you can go back to listen to that interview so that you can hear some of the strategy that their ETF is following to kind of take your approach in here. So what I personally do when I'm holding a stock, if I'm just holding the stock, this is a little bit different to SPAC game, but just stock period. When I get to that target price point that I want to take profit, a lot of the times I'm either going to take half or 2/3 of the position at that price point, because we don't want to be greedy. We always want to take our profits when it gets to that level. So that's what I'll do. And then I'll let the stock kind of try to continue the momentum. If I notice that there's a kind of a day when it cracks down below that price target, that's usually when I go ahead and just take the trade off. I gave the potential for it to go ahead and double up. But if it doesn't, then I go ahead and take it down and take the profit. I call that playing with the house money. And I think it's so important that once you get into a good investment, always understand where your profit target is. Because if you don't have a target, then what usually happens is we become greedy. Let's say in like Helion, you got in there, let's say before it ripped out at 20 and then it got up to like $40. You had an over 100% gain. And then what happens is sometimes we become greedy and we are expecting bigger than 100%. That very often, even in SPACs, is going to be hard to get that return. So one of the things that I talked about, and I talked about this with a friend of mine that was stuck in Ride for a little while here at the $20 price point. And one of the things that we talked about was, you can't be greedy. You have to understand where your price point is and what your targets are going to be so that you can get into these stocks and not get caught at that 20 price point and see it drop down towards that 15. And then you're stuck wondering, well, what did I do? And it's very painful down here, to hold, to let it come back up to these levels. So always what I recommend is understand where your profit target is going to be in these SPACs. And like my friend said, if I see a 20% gainer now, I'm taking it off the table and I'm moving on to the next trade. I think this is a very important thing to approach, and always understand your risk management and your profit targets, guys. The trader with a complete plan is usually the trader that can handle the emotions, the ups and downs of trading. All right, guys, I want to really give a shout out here to Juan Codas here from Canada. We got someone watching from Canada. Chris, what do you say, man?
Oh, man, Juan, thanks for joining our show. We're going international. Love it, love it.
Yep, definitely. I love this next comment that came into YouTube. It was from Sheriff. That's very good. At the end of the day, you can't go broke from taking profits. And that's the truth, guys. Understand what's your risk. Am I risking 5% for that 20% gainer? That's a beautiful gain. That's a 4-to-1 look. I'm going to talk about that a little bit more as we keep going along with the show. That's one thing that I do, guys, is I do some trading on the side. So if you guys want to work some risk management, some trading management, it's very important to understand. All right, guys. So let's go ahead and let's get back into the chat here. I am noticing some people start talking about. I got one here from Melody KCAC. Let's check it out. Let's see how it's moving right now. I'm gonna go ahead and I'll add this one to our watch list because this is definitely one that's watched out right now. So let's take a look here and see what we got here. All right.
Guys, drop those tickers in the chat and go ahead and drop what location you're watching from right now. Let's find out where our show fan base is based out of. So drop tickers and drop your location.
All right. Boom, pulled it up here. I like this chart. And, we're looking at the 15-minute chart here. So it's a little bit closer in here. I'm going to take a really quick approach. And you see this one rip out here on the 13th towards this $21 level. When you see a strong hold of that support of 17. One of the things that I'd be seeing is for this trend line that you're seeing kind of formed right here towards that 19. Let it try to get back above that 19 with some good volume. That'll show some confirmation that the buyers have taken control. And we can go ahead and see maybe an attempt run towards that 21. I am seeing now that we are getting set up in a little bit. We'll be having an exclusive interview, so stick around, guys. Hit the like, hit the subscribe below. Super excited to have on today. I know Chris has been working hard to get this interview and bringing you guys the information that you guys need to continue making these great trades. So let's go ahead and let's get into the last kind of ticker that we'll touch today. Let's look at the comments here. Let me try to pull one more here. All right, guys, seeing some talk on some solo. NAKD ripping. Man, I used to day trade that one. Be careful with that one, Steve. All right, guys. Seeing some other talks. XPEV. Yeah, definitely. You know, Juan, I'll cover that one. It's not really one that we talk about much here, but it is a part of that EV plays. So let's take a quick look, and then we can jump back into our interview. One of the things that I like to do, guys, is, as you can see, we're going to use a 15-minute time here. Time frames on the 15 minutes usually help me find the major support. And that's what I'm looking for when I'm looking at stocks. I'm looking at levels, looking at resistance, and trying to time in what we talk about on pre-market. You know, you got to buy the pullback and sell the rip. You know, so one of the things you see here is a push out to 40. It pulls back towards the support here in the $32 level. Boom, you get another rip out, right? It goes to that $50 level. You get a retracement here towards this $40 level. And now you're getting multiple touches of that 40. When you have those multiple touches, you know that that $40 level is holding up. And now what you want to see is a rebuy volume coming in here. So you got this downward trend line above this 44. It could pull back towards that area. I would pay attention to see how much volume gets in there to see if it can continue ripping. As we've seen from these other EV plays, if we could take a look, I know WKHS was mentioned, so I'll take a look really quickly. That one's up about 3% on the day. If we look at that daily chart, we're starting to see another push on up. Be careful with a little bit of pullback towards that $20 area, but we'll keep a watch out. This one's still waiting on that contract. All right, so let's go ahead and take another look at another EV play. I know there's a solo mentioned here, so let's take a look at that one. And man, look at this chart. Woo! You've seen the stock make moves above 7 before, but it always pulls back almost that same day. And now what you're seeing here is a little bit of a different kind of tell to the story here. So if you look at the prior pass, you see those spikes and quick volatility right back down. But one of the things that you're seeing here is, as of July, we got a rip, and it did come back down towards the support, you know, and that's why you can't get always caught into buying the highs. But as we've gotten this last rip out at 750, it actually held the support here and got another bid here. And you see the volume increase today above that $8. I'm going to think that $8 is going to be very vital to the stock. If it can hold at $8, I think we can keep on moving on this one, as you got in the sentiment to keep pushing on and up. But we'll definitely keep an eye on this one above that $8 price level. All right, guys, want to go ahead and catch up with the chat here. Like always, guys, I love seeing some new faces. I know we got Johan, Greg, OS, PJ. These are the guys I want to see, guys. I want to see you guys. If you're listening in on us and you're not in the chat, you're missing out. So definitely jump on in, talk to us, and that's what we're here for. We're here to go over the tickers that you want to see. So any ticker that you like right now, Chris?
You know, so someone brought up Solo. If you can pull up the chart for FUV, that's another small EV play. It looks like it's rocketing higher today. They kind of make those smaller electric golf cart sized vehicles. Looks like they signed a couple deals with some cities to integrate those into city fleets. Again, be careful with this one. EV plays have, you know, traded all over the place this week. That's one that I've been watching for a couple days now. That's probably one I would take a look at, you know, over a Solo, but that's me.
I mean, you saw it from the reaction of my face when Chris mentioned this one. Look at this chart. This is my kind of chart right here, guys. Look at this daily chart. Look at that support at $6. You know, you got a clear support right underneath it. And one of the things is, when you got what they call multiple layers of support, that's probably going to be the best time to try to get in near that support level, because what multiple levels of support give you, it's called volume profiling, right, guys? So one of the things with volume profiling that you want to see is you want to know where the volume is and where it's getting in, because what that creates is kind of that undersupply beneath the stock. And then when buyers really take control of it, like you see on those breakouts of volume, it just doesn't look back here, guys. So one of the things you see is that declining of volume here. And then what do you get? You start seeing that spikes. this is what I like to see, guys. That increasing volume as it's going towards the resistance shows you that buyers are taking control. And then you need a nice day at the resistance. And what I mean by a nice day is I want to see an increase of volume through that breakout. And what are you getting here? An increase of volume through the breakout resistance. And so that's why you see that kind of that continuation here on up there to that $13 level. I didn't even know about this one, Chris.
Mitch, can you pull back from the chart? Can you go to the news on that one? So guys,
Yeah.
Mitch is using Benzinga Pro. If you guys don't have Benzinga Pro, there's a free trial in the description on this YouTube video. If you look at the news on that stock, you will see mentioned right there, City of Orlando, a new test program. So again, they're landing deals with different cities. That's a huge catalyst. You're getting that first from Benzinga Pro before this stock rocketed up. You had the news right there out in front of you. So if this one was on your watch list, if this one you knew about, you see that catalyst and you could have gotten in before that movement. So definitely check out Benzinga Pro. And again, this is one I like here.
All right, the old mute trick there. Like always, guys, really excited about this next part. This is what we're here for, guys. Let's go ahead and let's bring on our interview for today. Chris, I'm going to go ahead and let you introduce her. She has been someone that I definitely am going to watch out for on the rise. So definitely, if you guys like your SPACs world, pay attention. This is it right here, guys. Go ahead, Chris, bring her in.
All right, guys. So we have another exclusive here on Benzinga today. We have with us Patti Cook. We are excited to have Patti Cook on the show today. She is the CEO of Finance of America. She joined the company in 2016 and has served as the CEO since October 2020. She is expected to join the board of directors of the new public company. Prior to joining Finance of America, Cook worked at Ditech Financial, Green Tree Servicing, Freddie Mac, Prudential Investment, and Salomon Brothers. Finance of America is set to merge with Replay Acquisition Corp, symbol RPLA. So again, Patti, thanks for joining us on the show today.
Thank you guys for having me.
Super excited.
And hello to all your viewers.
Yeah, super excited. We're glad that we got you on. Everyone that stuck around, definitely hit the like, hit the subscribe, and let's go ahead and let's watch.
All right,
let's get into these questions. Go ahead, Chris.
All right, Patti. So I've watched a couple of your interviews, and you have said that it wasn't necessarily the structure of a SPAC deal that attracted you to doing this deal, but the people attached to Replay Acquisition. So can you kind of tell our viewers what the team from Replay Acquisition brings to the company on this deal?
Yes, and you're right, Chris. It is the combination of the three sponsors. Edmund Safra, who's the sponsor of the SPAC itself. If you look him up, you'll see he's not new to the SPAC environment, and he is a longtime investor. If you look at Chin Chu, who's now running his own business, he was a longtime senior partner at Blackstone on the private equity side, and in fact was there when Blackstone made the investment to start Finance of America 7 years ago. Also incredibly experienced. And then you have Lance West, who's a former partner at Centerbridge and then went out on his own. And he has a history with us as well. Centerbridge invested in Green Tree. Brian was the CEO, and I joined Brian there. So it's both the familiarity, it's their depth of experience, and it's the advice we think they can give us as we go down this path. In addition, Blackstone and the management team will continue to own 70% of the company, and our interests are all aligned. The incentives that the sponsors have alongside with the incentives that management has are fully in sync.
Awesome. So Finance of America has several companies and units underneath it. So can you kind of walk us through the different business segments that make up Finance of America and the different segments that they operate in?
Yes, certainly, Chris. And this is the core distinguishing factor. When you look at Finance of America, particularly relevant or relative to many of the other financial services and mortgage companies, that have also gone public. Our desire when we formed Finance of America was to build a company that would generate growing, cycle-resistant earnings. And if you look at the history of the mortgage market, that's hard to do. So we looked at it, studied it, and there's really a fairly simple solution. And that is to be in businesses that are themselves uncorrelated. So that is what led to the particular design of Finance of America. It was purpose-built to bring businesses together that were complementary and not highly correlated. So our 5 segments include your traditional mortgage market, which, as you know, is huge and is enjoying great tailwinds right now with low rates and a lot of refis. The second segment that we're in is a reverse mortgage segment. And the reason we like reverse is it speaks to a different opportunity. There, we're focused on the aging baby boomers who want to stay in their home as they retire. They haven't saved enough to retire, and yet they have meaningful equity in their home. Probably 50% of their wealth is tied up in their house. That totals $7 trillion. A reverse mortgage is an elegant solution to tapping into that equity, uncorrelated pretty much with rates. Then you go to commercial. Commercial for us is we lend to investors that want to rehab properties and either fix them up and flip them or hold them as a rental property. The opportunity here is that the aging housing stock in the US is 37 years old. And as millennials start to want to be in a single family home, either to rent or to buy, they want something new. So we've seen increased demand for this type of financing. So 3 lending businesses in themselves uncorrelated in the sense of what drives them. Now add to that 2 more segments. One is a fee-for-service segment called In-Center, where we own businesses that provide services to lenders. A great example is we own Boston National Title. We have 1,300 third-party customers in In-Center, in addition to using those services ourselves. 75% of their revenue comes from third-party clients. And then lastly, we have a portfolio management business where we have our own broker-dealer, we have our own registered investment advisor, and we are launching, creating proprietary products and distributing them through that group. You put that combination together, and we don't think there's anybody like us.
Wow, I mean that's a lot of different areas that you guys are definitely touched, and I do like how you guys are focused on the uncorrelated aspect of it, so that everyone can go ahead and focus on their investments at the end of the day. We're always going to have waves in the market. One of the things that I focused on, and what you mentioned, was if we focus on, let's go to college loans. We've gotten mentioned of maybe college forgiveness, some loan forgiveness. What are you thinking in that environment, and how would that apply to your business? Would that go ahead and help your business, or would you think that would go ahead and hurt the bottom line?
Great question, Mitch. We are not currently active in the student loan market, but we are prepared to be. And let me give you an example. In that third-party business In-Center, we own a company called Campus Door that processes student loans for people that originate them. If we see an opportunity to originate a proprietary product in the student lending space and be able to distribute it, we are ready to go, almost with the flip of a switch. So we will watch and are watching closely developments in the student lending space. And if we see an opportunity to add it to us in a way that is uncorrelated, we would do so.
Excellent. And the other thing that I've been paying attention to, and it's because at the end of the day, I've been looking to get into a house myself. I know that you mentioned the new generation, and
Yep.
a lot of it's been focused on rentals. So I think with the mention of a possible $15,000 tax credit mentioned by Joe Biden, I definitely am paying attention to that. I myself have some down payment, so a $15,000 tax credit would definitely push me over the edge to get in that loan. So what do you think about that, and how that could play into your environment?
I mean, we're very excited about the purchase market going forward. And if you look at Fannie's forecast, or whether you look at the M.B.A. forecast, unlike refis, which obviously are going to decline, the purchase market is going to continue to increase. And let me make another important point when you think about the mortgage market and the channels we're in. So we're also diversified in the channels we're in. Here's what I mean. One of the ways you can get a mortgage with us is through our 280 branches and 1,000 loan officers. Those loan officers work for Finance of America and are getting their leads from realtors. And you'll hear a lot about technology. And you guys are certainly, if you're going to get a mortgage, Mitch, I'm confident you want that process to be easy. You want it to be smooth. You want it to be technical. And we're going to deliver to you that point of sale. But I'm also going to guess that as smart as you are, you probably have a few things to learn about the various mortgage products that would suit you. So our approach is technology is an enabler. It's not the way we get our leads. So we believe in that distributed retail model. It is a great purchase model. January of last year, we were 75% purchase. This year, we're 75% refi. Now, having said that, we have the same distribution as UWM. We have a broker distribution, and we also have a small direct-to-consumer business, similar but tiny compared to Rocket, and that'll sit there. And if we think you're all going to go get your first mortgage by going online, then maybe we'll take a different approach as to how we might grow that. But for today, 90% of the people use a realtor. For millennials, it's actually a couple percent higher. And if your realtor says to you, Mitch, I know if you go to Finance of America, they're going to close your loan on time and you're going to have a good experience, you're going to try us. And if the rate's a tiny bit higher, we're betting you don't shop.
Definitely. I think you couldn't say it better. I know Chris has a question to add about that Rocket. So go ahead, Chris.
Yeah, so we've talked a lot about Rocket on the show. I saw them listed as a competitor in the presentation. You kind of mentioned some of the differences, but can you kind of walk us through what do you think the biggest things are that set you apart from, a public company like Rocket that's gotten so much attention lately?
Yeah, certainly Rocket is a great company. They have built an amazing franchise over the last few decades. They've spent a lot of money on their brand. They've created a great technology. They're a great company, and they're going to continue to grow their brand, as they've said publicly. But the difference between us and them is we're not just a mortgage company. So as good as Rocket is, they're still going to have some correlation to the ups and downs of the mortgage market. And maybe they can outpace that by growing market share. And it's not to say that it's still not a good bet in the long run, but the main difference is they are a mortgage company. We are diversified. And that diversified nature of Finance of America, we believe, will help us grow and generate those cycle-resistant returns. It's interesting.
So,
one more point on
go ahead.
is you look at all the companies that have come public. I think it gives you and the investors a great opportunity to dig in and learn the difference and watch. Watch Rocket, UWM, us, Guild, and see how we perform and begin to understand the differences. At first, we were worried, oh my gosh, the space is so crowded. Then I came to the conclusion, you know what? Maybe not. Maybe this plays to our strength because we can talk about how we're different.
Awesome. So you mentioned some big numbers when you talked about your 5 operating segments, and this may be a tough question to answer because you don't want to single out any of those units, but of those business segments, which one do you think is the one that sees the biggest growth potential going forward?
I could give you an argument for each one, and that really, I'm not trying to dodge the question, but it's the truth. Let me give you an example. In reverse, of the people that are eligible in the US, only 2.5% of the population takes out a reverse. They do something else. They take out a 30-year fixed rate mortgage, even though they're older. If you look at the UK, where they've had longer experience with the product, then they have 25% of the eligible population takes out a reverse. So I think over the intermediate term, there is a huge opportunity for that to grow. And we today, because of our proprietary product and our agency product, are number one in that space. But then you've got the mortgage market, which is huge. And at some point, rates rise, we think it consolidates, and we're in a great position to be able to do that. Same thing with commercial. So honestly, this is the benefit of diversification. You pick a handful of segments that you think all have good growth opportunities.
Awesome. And then last question I have for you. In the investor presentation, it showed some future areas of focus. It mentioned agricultural loans, fund management, POS lending, and home improvement. Are those all considered add-on markets, or is there the potential to look to bolt-on acquisitions after going public?
So that both. Okay, so some of those are already in the ground. We're going to close on our fund probably in a couple weeks. We're already in partnership with an agricultural lender. So, and you may also see acquisitions. So one of the reasons of going public is this gives us the flexibility to do both of those, either invest organically in the growth or selectively identify strategic acquisitions. So you're going to see both coming from us.
Awesome. So that wraps up our questions today, guys. Again, thanks to everyone who stuck with us for the whole show here. We brought you another exciting CEO. So this was Patti Cook. She is the CEO of Finance of America. They are merging via SPAC deal with Replay Acquisition Corp, symbol RPLA. So definitely keep an eye out for that one. And we look forward to following the progress of this deal closing and Finance of America in the future. And we hope to have you back on. So thanks again, Patti, for joining us today.
Thanks, you guys, for having me. I enjoyed it. Have a good day.
Yeah, thank you, Patti. I definitely might have to call my realtor and find out a little bit more about these.
Good. Sounds good.
All right. I appreciate you coming on. We'll see you next time.
No problem. Thanks
Bye,
a lot.
Patti.
Bye.
All right, guys, that was Patti. Thank you guys for joining us. Like always, guys, if you got some value out of that, I know I did. So hit the like down below, hit the subscribe. We're going to keep doing this every single day, guys, bringing you the experts, bringing you the CEOs, the executives that you want. So if you guys have anyone that you want on the show, definitely put it in the comments below after the show, and we'll go ahead and bring it to you guys. Like always, guys, this is going to be Mitch. I got Chris Katje, and this is the SPAC Attacks, guys.